But let's keep it then with the overall markets as to what's going to be the next trigger, how the earnings season is shaped up, and what the outlook is for the index. Ritu Arora, CIO, Canara HSBC, OBC Life Insurance with us on the show. Afternoon, Ritu. It's turning out to be an awfully flat day for the markets at this point in time, and we're clearly not piggybacking on global cues at this juncture. What is it that you're expecting by way of direction for the markets going forward in light of the fact that it's been, I think, pretty much a mixed earnings season so far?
Thanks. I agree with you. It has been a mixed earnings season so far, and we are not rising with the global markets at this point in time. But we also have to take into consideration the fact that we are currently trading over 18.5 times FY17, and that is reasonably good valuations. And it is reasonable for market to take a pause after the 16% rally that we saw over the last few months, largely driven by the strength in domestic economy and the abundant liquidity inflow that we saw from FIIs. So a pause or consolidation is very welcome and will give us opportunities to build positions for the long-term positive direction markets that I anticipate.
Ritu, do you think it's time to look outside that historical prism that 18 times is expensive or 19 times is expensive? We've seen these typical historical PE bands when interest rates in the world were not at zero and liquidity was not so strong. I mean, currently we have zero interest rates and abundant liquidity, and when these two factors are at play, do you think the PE multiples will naturally expand?
The global environment that we are in is of course unprecedented. We haven't seen this kind of liquidity, zero negative interest rates. Why do we talk of zero interest rates and long-term negative interest rates? And there is absolutely no sight of unwinding yet. Countries and economies will continue to generate a lot of liquidity, be it Europe, be it US, be it Japan. So yes, we will be aflush with liquidity. But fundamentals cannot be denied. There tends to be a froth if you start overlooking the fundamentals. So 18.5 time markets for the fundamentals in terms of corporate earnings that we have are quite well priced. Indian markets have traded even up to 22 and 23 times PE, but for that I think we need to substantiate it with better corporate earnings. Having said that, liquidity defies all rules. We've already seen $4.5 billion come in this financial year, where domestic flows have just been about $500 million. So yes, liquidity will continue to give the strength to the markets, but I would think the strength would be more strong if we also start seeing corporate earnings improving. But I'm extremely bullish next 3 years, like I said, and that's why any consolidation and pause is very welcome.
Let's talk about IT. Do you think currently IT is in a spot of bother? The currency tailwind is missing. The industry is now not growing at historical run rate, it is contracting. So 12% growth rate has become 11, 11 will become 9, 9 could become 8 in next 2 or 3 years. And then today we've heard the first Brexit casualty. Infosys has admitted that RBS, which is a UK based bank, they are downsizing. So do you think this could be just a beginning of what could be called as a long and hard road for large cap IT companies?
It is definitely looking very difficult for IT companies going ahead, and what will hurt them is the uncertainty, and Brexit is one of the key reasons for uncertainty that we see, at least in the European path. In uncertainty, what organizations do is defer decisions, not take long-term decisions, and IT definitely is a casualty of such decisions getting deferred, and there will be an impact. I agree with you, today is the first casualty that we have seen. Currency for India has been quite resilient, which from economic perspective is a positive, but for IT companies it will be a challenge going forward. I think also what's changing globally is the product mix. The business mix for IT is changing, and our IT companies will have to rejig their offering substantially to remain competitive and to have the kind of products and the services that are now being demanded from IT globally. Innovation will be pretty crucial and up the curve. So yes, I do agree with you. IT companies will see a lot of challenges going forward for the next foreseeable future.
Ritu, let's also analyze the outlook for the banking space. There was just an announcement as well that there will be further tranche of PSU bank recapitalization by January to March next year. How are you assessing the fundamentals in the PSU banking space? Really stark when it comes to the results that we've received. SBI was perhaps one of the silver linings this time around. So what does the space look like according to you?
This is a space which is definitely a reflection of the economy and hence needs to be watched very closely. I'm a little disappointed with the results that I saw. I was expecting some kind of stability, recovery, improvement to be seen this quarter. By and large, if you look at the PSU banking space, that is not visible. Of course, like you said, some large bank like SBI stands out. But if that was the tone that other banks could demonstrate, it would have been very, very encouraging and we would have seen a big rally there. Capitalization, of course, is now not really an option. It's more and more becoming a compulsory requirement for these banks as their assets keep getting stressed and capital eroded. It is a sector which has run up. We will need to continue to watch it, not just for the sector fundamentals, as I said, but also for the economics. We've made good money here, but I think it's definitely not somewhere where you should build new positions without discerning between the different results.
Okay, Ritu, appreciate your time and so glad to have you back on ET now. Well, Interglobe Aviation, it's that